or majorly not actually about the trade in terms of the market and itself, no, but we want to talk about answering this particular question we have here. Now, a student asks, he says, "Hi boss, good afternoon. Please make a video of BOS, which is break of market structure, with the swing high and swing low for an uptrend and downtrend, and change of structure, and change of structure to the uptrend and downtrend with example on the real chart." So we want to answer this particular question. Getting to answer it takes us back to the market chart. Now let's simply go to the one, okay, which is volatility, then fine. Now we have trend. When markets create a low, create a higher low, creates a low, higher one, and a higher one. Now this basically is our uptrend. Now when this level is being broken to the upside, this becomes our break of structure, which is our BOS. Now when our BOS is being plotted at this particular point, which means this particular low took out this resistance, you understand, or took out this high, this particular low took out this high, and this becomes a break of structure, creates a break of structure. Now what are we going to look out for? We are simply going to be looking out for this particular point and this particular point. So this particular low here becomes our swing low. So I'll simply say our SL. So the SL swing low, that's what we mean, low, that's what we mean. And then the high here becomes our what? Swing. So that's what we mean when market does this at this particular point. Now this area becomes our swing low, this area becomes our swing high. Now when market creates a new break of structure here, for instance, this particular new break of structure becomes our new BOS. You understand? This becomes our new BOS. This becomes our new BOS. And this point becomes our new swing low. I'll clone this. So this becomes our new swing low. And then the top level, and then this level becomes our new swing high. You get, by virtue of market breaking this particular point, price pushing up above this particular resistance, this becomes our new swing high, this becomes our new swing low. Now this becomes our break of structure. Now the final one we can see here is when market breaks this particular level. Now it gives us same character. This particular high becomes our new swing high. And this particular low, and this particular low becomes our new swing low, which is here. Now this is for an uptrending character. This is the market structure for an uptrending character based on the break of structure, understanding the swing low and understanding the swing high. Now this is cleared for an uptrending move. Now let's give a character for a downtrending move. Now for a downtrending move, we have the high, it breaks to the downside, it goes up, breaks to the downside, goes up, breaks to the downside. Now what kind of character do we have at this particular area here? Now we have what? We have these levels. Now to the downside we have this point. This becomes our break of structure, which is our BOS. You understand? This becomes our break of structure, and then this becomes, okay, so I'll delete this. Now and I clone this, this becomes our swing high, and then this becomes our swing low. So this new swing low, by virtue of this price retracing and breaking this particular point, that becomes our new swing break of structure basically. So this becomes our new level of break of structure. You can see, so this becomes our new level of break of structure, and this level becomes our new swing high, and this level becomes our new swing low. So let's get that done. Clone it, and you see this becomes our new swing low. We'll do that for this. This becomes our new swing high. So you can see it's a new break of structure, new swing low, new swing high, new swing low. Now, having understood that, we have another break of structure again at this particular point, which is this. Now, by virtue of seeing this break of structure, which is BOS, we have our new swing low at the bottom. So market creates our new swing low, and also it creates our new swing high. Creates our new swing high. So this is the structure of an uptrend and a downtrend. You understand? So this is the structure we have for an uptrending market and a downtrending market. Understanding the swing highs and understanding the swing lows. Now I'll run this down again. Now by virtue of market breaking structure to the upside, we have our new swing, our break of structure, we have our swing high, swing low, and our swing high. Now by virtue of market also breaking structure again to the upside, we have our new swing low and our new swing high. We get a break of structure again at this point, our new swing low, our new swing high. Now this is for an uptrending market. Now for a downtrending market, by virtue of market breaking structure, which is breaking the support level or the low to the downside, it creates this point as our break of structure. Now the high which created that break becomes our new swing high, while the low which was broken becomes our new swing low. Now a repetition of that here, break of structure, new swing high, new swing low. A repetition of that, break of structure, new swing high, new swing low. So now this is the structure of an uptrend and a downtrend in terms of understanding the break of structures and understanding the swing highs and swing lows. Now, having understood that, I'll be deleting this and let's go to the next phase. Now, on the next phase, I will actually be drawing a structure of a change of character to the downside and a change of character to the upside. Now we have market coming from here. It's dropped, rally to the upside, dropped, gave a break 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 to the upside. And then instead of dropping and pushing into these new highs, you understand, it now took away this low, thereby giving a break to the downside. Coming back to this point, giving another break to the downside, coming back to this point, and so on. So now this is a different structure. This is when we understand change of character. Now this is a change of character for a sell market. Now I want to give us an example. Okay, before I give us an example of a change of character for a buy market, let's explain this particular level. Now for this, I'm simply going to be looking at these levels. We are simply going to be marking our levels. Now we can categorically understand that these levels are break of structure to the upside, break of structure to the upside, break of structure to the upside, break of structure to the upside. Now, this is our swing low, this is our swing high, this is our swing low, this is our swing high, this is our swing low, this is our swing high basically. Now, this is our swing low, this is our swing high, just like the same example I listed for you guys just on the previous chart. Now after that, when market creates this new high and the previous move cannot break above this new high and it broke the low, When it breaks the low, it now creates a break of structure, taking out that particular low. Now, when it takes out that particular low, we now want to see markets push, giving us a new character. This now becomes what we call liquidity grab, and then break structure to the downside, creates a new lower high. So this is basically a lower high. This is also a break of structure. That now helps us to understand that this is basically a swing high and this is basically a swing low. Now, by virtue of this break of structure, this is our swing low, this is our swing high. Now, and so on. The formula continues that way. When we get a new break, we get a new break of structure. This becomes our swing high, and this becomes our swing low. So that is how a change of character performs in an uptrending market. This is how we get a sell change of character. Now, I will be giving our example on the next chart, which is how to understand the change of character in a downtrend. Now, for a downtrending market, we want to plot the zone. So now we say market is pushing to the downside, pushing to the upside, going back down, up, down, up, down, up, down. The market pushes to the upside, breaking this particular resistance, and then didn't break to this low, creating a lower high, and then it pushes up, it comes down again, and then pushes up. Now this is a change of character. Now, how do we understand this as a change of character? Now, market has actually been creating what for us? To the downside. Market has been creating break of structure, break of structure, break of structure, break of structure. But in the process of all of this, market created our break of structure, it created our swing high, and created our swing low. It also created our swing high, also created our swing low. Our swing high again, swing low, created our swing low. Now this is in accordance with the direction of a downtrend. Now at this particular point, after market created this swing high here and this swing low, we could see price push up and it broke above the previous resistance, which created a new swing low. The moment market breaks above this previous resistance, which created a new swing low, we now are anticipating that market comes back into that particular level, you understand, and gives us a push high. So basically you can see that it's created a new a new high here, you understand, created a new high, and by the virtue of market creating this new high, we got a break of structure, swing low, swing high, and then market reacts from this particular low, for instance, based on the strategy. We are not really explaining that on this particular video, we are just explaining the character of the market. Now it creates another new break of structure at this point here by virtue of pushing price above this particular resistance, and you can see market create our new swing. This is giving off our swing low, and this is our swing high. Now what can we see again at this point? We can simply see same thing, market break structure, gives us our swing low, gives us our swing high. So this is a very important analysis you need to look at in the market. This is something that's very important. It helps us to be able to identify how to understand market moves. Now I'll be giving you examples of this I just labeled on the market chart. So now let's hop onto the live chart and see how market reacted of these particular prices, so we can implement how to go about it. So now on this particular one, we would simply delete this and then go to the live chart. Now on the live chart, basically you would find out that this is a character to the downside now, and which actually was pushing to the upside, you understand. So let's go to the 4 hours time frame. I think that will help us a lot. Very good. So on this particular time frame, we can see that market has actually a character to the downside, and it changed to the upside and then changed to the downside. So with this particular chart, we'll be able to make use of the analysis on the analogy we just placed out to the downside, and also identify where market price broke above the previous structure and then reversed and continued the move to the upside. And also how markets gave the continuation of move to the downside. Now, in clear terms, we will simply get to creation of this downtrend. Now, I think I will go to the daily time frame so that this whole thing will be very clear for you guys. Now, on the daily time frame, we can clearly see something. We can see that market created a break of structure here, a break of structure also here, a break of structure at this point, a break of structure. It also created a break of structure at this point, and a great break of structure there. Now, this is a downtrend. We got our swing high, we got our swing low, we got our swing high, we got our swing low, we got our swing high, we got our swing low. Basically, this is our swing high again, and this is our swing low. Now, after all of that, price dropped massively to the downside. This is our swing high, and then this is our swing low. We also got a swing high at this point. Market broke to the downside, creating our swing low, and then creating our swing high. Now, after this, all of this happened, you would clearly understand that price did something very, very straight here. Now, what did we see? We can see that let's see. You see, price took out this particular price point, this particular resistance here, the previous swing high, which created the most recent swing low at this point. It took it out, and thereby the character changed, where we began to see swing highs, break of structure to the upside, break of structure to the upside. On the high, this is daily time frame. Would have seen more of this on smaller time frame, but I just want to show you on the daily time frame so that it's a little bit clear. Now we see break of structure again to the upside. All of that kept on creating break of structures to the upside, and also creating swing low and swing high, swing low and slow here, swing high at this point, swing low. It also created a swing high at this point, a swing low, a swing high, a swing low, and overall swing high at this particular area. Now, market having done this, it was something very important for us in the market, because it helps us to understand that, okay, since market has been creating a swing high, and market began that match the direction, thereby breaking this particular previous swing low. By breaking this swing low, we can see market started creating swing high and swing low, swing high and the swing low, give us a swing low, give us a swing high at this point, give us a swing low at this point, give us a swing high and swing low. Now, all these swing high and swing lows appear most on the smaller time frame. You understand? All of these swing highs and swing lows, they appear most on the lower time frames. Let's see if we can get something like that on the lower time frame, which is the 4 hours time frame. That is where you can clearly see a clear break of structure. So if you look at it now on the lower time frame, you will clearly see clear break of structure at this point. So you clearly see this level was taken out before market began to drop. You see this level taken out, break of structure here, break of structure at this point, break of structure at this point, break of structure at this point. So now it all gave us break of structures to the downside. That is simply categorically telling us that the market is on a downtrend. Now, in all of this, we also have, you can see, we have break of structures to the upside, break of structures to the upside. And that is something that really helps us to understand the market a lot. Break of structures, and all of that. These are break of structures to the upside. Why the one we have at this particular area here are break of structures to the downside. Now, all of this just helps us to understand the reaction of price to the market, help you understand how market changes character to the downside and how market changes character to the upside. Now, if this is all I have to explain to you all in this particular video, If you need more explanations on this particular video when I talk about the market structure, market swing lows and swing highs, you understand? Understanding the trend of the market based on the swing lows, break of structural levels, and the reactions it actually gives us in the market. Please do well to drop a comment on the comment section to tell me to give you more explanation on this particular topic, and I'll do well to do that. Do have a wonderful evening, guys. It's one love, Larry FX Academy. I would really enjoy you all to give us a thumbs up and subscribe to our channel in order to help the algorithm show our videos to more people who would love and engage in this particular video based on getting the understanding of market structure. You understand, guys? Market structure is basically key to the market in trading. Whatever pattern you make use of in trading, this market structure helps you a lot to be able to help your trading become simpler. Do have a wonderful day, guys. One love, peace. Larry FX Academy.